Hey guys, welcome to episode 10 of my Robinhood Portfolio. And right now the portfolio is sitting on $11,000, $11,500 for a return of $19. The after hours, I am minus $10. So in all reality, for yesterday, the markets are closed today because it's Saturday, but yesterday I gained a total of about around $9 or $8. There was a lot of things going on this week. There was a lot of things that caused the market to go down. There was the Fed decision. There was Trump and his tariffs. But again, if you're in it for the long term, if you have a positive outlook, you don't panic when things like this happen. Like I believe right now that the market is still somewhat overvalued, and I do believe that we are due for another correction. But you can't let that sway your path. You gotta hang in there. You gotta hold on to your stocks, and you need to buy up these dips when the stock goes down 10% and 15%, and you're sitting there and you're looking at it. You just can't keep watching it. You throw some money at it. If it's a good company, if it's a company that you trust and that okay, this company knows how to make money. This company is on a good discount. Look at Johnson & Johnson. They're very diversified in the healthcare industry, and right now I think they were about down 17%. So that is a great buying opportunity. And if you look at all the successful portfolios like Warren Buffett, all these big shots, they buy and hold. They buy and hold, guys. They buy and hold. They don't sell. They hold it out. They collect dividends. But we're going to talk about my portfolio, what I've been doing. Have I moved stuff around? Everybody's telling me, hey, how you doing? How you feeling? The stocks are going down. Are you selling? And I don't think that you should freak out whenever the markets are tanking, or whenever markets are going down. And that is the ideal that you need to have as an investor. When the markets go down, you need to look at that as buying opportunities and buy these dips. But with that being said, I have moved some stuff around. My portfolio is actually much larger than it was in the previous video, but again, you try to get ahead. You just try to move stuff around. You try to do stuff. You get creative. And I guess the outlook now is that I had an Excel spreadsheet of all the stocks that have paid great dividends, that have either an extremely attractive dividend yield or stocks that just align themselves with certain months that they pay dividends. But what I'm trying to do now is move this portfolio into some sort of compound investing, because I see how well my M1 Finance account is doing. I look at my M1 Finance account. That's an account that I have not touched, and monthly dividends are just generating over and over again. And right now, even though it's a small account, I'm really up on that account right now. That account, I believe that account is, really doing surprisingly well with just compounding the dividends. And I believe that over time, that account might even outpace this account in terms of percentage gained. But, I looked at it and I said to myself, okay, I want to start compound investing. I love these growth stocks. I love, stocks like MasterCard and Visa and all these other stocks that have extremely good growth. But I'm going on well into my 40s, guys. I'm going into 40. I'm looking ahead. I'm going to be 40 years old. I'm going to be 50 years old. I'm going to be 40 years old sooner than I think. Next thing I look up, I'll be 40 years old. It's time to start compounding my money. It's time to start getting paid every week. And I know there's monthly dividend stocks, but I'm generating cash flow. I want to get paid every week. I moved some stuff in my portfolio. There's something that I hated doing. I sold Apple again. I didn't want to sell Apple, but that $1,900, I needed that $1,900 to just diversify out into other companies. And so the outlook for this portfolio is I want to get paid every week, guys. Every week I want to get paid. I don't care if it's $3. I don't care if it's $10. I don't care if it's $40. I want to get paid every week, and I just want that to compound invest. So let's go over the portfolio. There's been a lot of stocks that have entered this portfolio, and as you guys can see right now, this is almost like double the amount of stocks that I had in my previous portfolio, and I don't even know where to actually start with this portfolio. You know, Apple's gone. I sold Apple again. I know they went down, and I took a loss with Apple, but I didn't take as much of a loss when the tariffs got announced. But again. Look at a stock like Caterpillar. Caterpillar is right back in my portfolio, and they announced tariffs, and the stock went down. The stock went down. All these industrial stocks went down. Boeing went down. They might be at a buying opportunity now, but we're going to just look at what I'm trying to do. You see, when you look at my portfolio, you're seeing stocks like 10 shares of Walmart, 10 shares of Johnson & Johnson, 10 shares of McDonald's. McDonald's, a stock that I really like. I like their dividend. I'm up $66 on them. But then you look at a stock like Caterpillar. You're thinking that you're buying into the high, you think you're buying at a good price point. And it goes down. The tariffs got announced, and look at that. See, look at that right there. $17. $17 is gone. But again, if you hold on to these stocks, you're going to get paid a nice dividend, a dividend yield of 1.97. And Caterpillar is a stock that has been increasing their dividends. So if you look at my portfolio, stocks are increasing their dividends, and this portfolio. When I look at my Excel sheet, because I'm sitting there at work, I'm doing the work. I have two computer monitors in front of me. I'm sitting there and I'm typing out. I'm doing the job, and then I look to the right of the other laptop or computer screen, and I'm sitting there and I'm just making an Excel sheet. I'm making an Excel sheet because I got curious. I said, maybe with this amount of money, maybe I can compound invest. Maybe I can get paid every week. Why do I have to get paid, on certain dates and all this sort of stuff? How come I can't get paid every week? So that's why guys, you see stocks like Walmart. You see stocks like Cisco, PFE, Pfizer's back in my portfolio. Clorox, a great consumer staple stock. I have a lot of consumer staple stocks in my portfolio now. You look at stocks like Coca-Cola's in my portfolio, and stocks like AT&T, a dividend yield of 6%. So when I look at my Excel sheet, this portfolio right now. I'm saying it right now. This portfolio right now will pretty much average me a dividend yield every week, guys. Every week. So now I'm going to be getting paid every week with these strong yields. So this is a high dividend portfolio, if you want to call it that. There's a lot of diversification from my last video. When I had I think I had a lot of money into Johnson & Johnson, and I took that money and I threw it into, I threw it into a Bank of America. Here's Bank of America right here, and right now that I wouldn't say Bank of America is at a pretty good buying point. I think at around 28.50 or somewhere around there. I think that they're getting very interesting with the current dip. But again, I think that Bank of America is just another good stock. They're going to increase that dividend over time as long as you hold on to the stock. Southern Company, they're another company. The industrials, they're starting to creep back up here. 44. My average cost is average cost $43.90 with a total return of $8. 15 shares. I've moved stuff around. So you guys, he's looking at this Johnson & Johnson, 25 shares in my last video, now 10 shares. McDonald's, I trimmed McDonald's down, all to get into these other companies and sort of diversify my portfolio up just a little bit more. You look at stocks like Walmart, 10 shares of them. I actually think Walmart right now is on a pretty good dip. This is a company that is a $200 billion company that it really is not going to go anywhere anytime soon. They're not quite ready to take on Amazon, but they're doing some intriguing things that I like improving their e-commerce. Sales still look good, even though they shut down a whole bunch of Sam's Clubs. I think Walmart sales are very good, and they've shown that they can make money during a recession, which could happen literally any day now. We are in an 8-year bull market, if you want to call it that, an 8-year bull market run, and these stocks can very well start trending back. You look at the NASDAQ. The NASDAQ right now is on all-time highs. And, these tech stocks, I'm telling you, these tech stocks are very, very risky to invest in right now because all these tech stocks are super high, and the NASDAQ is on epic levels right now in terms of being on a bullish run. So there could be a correction coming. And, you look at a stock like Walmart, it got up all the way to $106. And then an earnings report came out. There was a lot of panic. There was a lot of fear. The stock trended all the way down to about $82. So the stock is easily on sale, and it's great diversification for your portfolio if you're looking for a discretionary stock. Let's take a look at Coca-Cola. A lot of I think Warren Buffett owns a lot of Coca-Cola. I personally said that I wasn't really bullish on Coca-Cola during my earlier videos, that I like Pepsi more. I still kind of do like Pepsi more, but the reason why I got Coca-Cola is because it aligns itself with my dividend payments of me getting a dividend every single week. And I talk to a lot of people about this. I'm sitting up there, I'm talking online on these chat forums, and I'm saying to myself, hey, I want to get paid every week. And everybody's telling me, hey, it's not about it's not about if you get paid every week or anything else like that. You should probably look at the company and see if the company is making money and this and that. Well, guys, I think it speaks for itself when you look at a company like Coca-Cola, which has an extremely attractive dividend yield of 3% and a market cap that is close to $200 billion. So again, Warren Buffett owns a lot of shares of this stock, and I know a lot of people are focusing on healthier drinks, and this stock is very well. I think that for the year, they're not. It's not really a growth stock. It's not. It's not a growth stock. This stock is the pinnacle of a buy and hold where you can get paid. You can get paid the dividend, and like I said, this the goal. The outlook for this portfolio is getting paid every week. I think KO and I believe Altria. Altria is I believe the cigarette company, and most people say, hey, the cigarette stocks, they should, why are you doing that? Why are you buying cigarette stocks? Well, look, $100 billion market cap with dividend yield of 3% and a high 3% with a PE ratio of 10%. So the owners' returns look pretty solid, not too bad. It's I know a lot of people who smoke, and even though it may be unhealthy, people are spending money. They're spending money on cigarettes, and they're using the product. So there's money to be had, and you want to get paid a nice dividend for holding on to the stock, and that's why I bought it. You got riskier stocks in my portfolio like NRZ, which has a ex-dividend date coming up. They pay a really attractive dividend. Even though the dividend might be high, they have shown that they are able to sustain this dividend. And that's the thing. You don't know if this company is going to be able to sustain that 11% dividend, which would pay you about 50 cents on the payout day, so per share. So I have 25 shares, so I'm looking at about $10 to $12 payout. And then you look at stuff like Store Capital, that will give you some even more diversification in the REITs market, the real estate investment trust that even Warren Buffett himself owns a lot of shares of this stock, and just diversify even more into real estate, owning these properties. And I've done a little bit of research with this stock, and they're very well diversified. They own a lot of properties with very, very solid businesses like Applebee's and all these restaurants. It's a good stock. Stock might be a little bit overvalued now, but again, when I look at what the company is doing, the market cap might be small. This is more of a risk. This is more of a risk. This is not as riskier as NRZ, but I believe that I want to buy in. I want to get paid every week, and so I bought a lot of shares. The stock can go down. And I think that maybe around $22 to $23, this stock is a buy. But again, I just feel like with the portfolio that I have set up and looking at my Excel spreadsheets, this will pay me every single week. I think there's only maybe a few weeks out throughout the year where I won't get paid, but there are certain weeks where Johnson & Johnson will pay me $9 for holding on to 10 stocks, and then Southern Company on that same week will pay me $9 for holding on to 15 shares on the payout day. So guys, it's all about doing research. It's all about you get clever. You get clever with your portfolios. Ask yourself, what direction do you want your portfolio to go in? Are you a buy and hold investor? Are you investing for the dividends? Are you a growth investor? Do you like growth stocks? And I've been through them all. I've been through an Amazon. I put $500 onto Amazon, and I've invested for dividends, and I'm trying to find my niche. I'm trying to say to myself, okay, I want a growth stock, but I also want to get paid for doing as little as possible. I want to get paid for doing as little as possible, and hopefully I can retire off these dividends one day when the compounding gets serious enough. When the compounding gets serious enough, and I can make a lot of money off these dividend payments every single week, then we're talking about retirement. And I do want to retire because I need to start thinking that way. I'm 32 years old, and I look at these growth stocks. We're in an 8-year bull market. Because historically, after these 8-year bull market runs, these stocks start trending back. They start trending back. There's a lot of reasons that the stock market crashed back in 2008 and around the year 2000. In the year 2000, with the .com crash, and then then you look at stuff like I wouldn't say the Great Recession, but a really bad recession in 2008. Where all the stocks went down, but when you look at a stock like Walmart, they actually did very well in the 2008 crash. So guys, this is what I mean when you have to do the research. I think sometime during this week, I did about 4 hours of research and trying to put this portfolio together to where I can start doing that. I can say, oh, okay, I know I'm going to get paid this week. I know I'm going to get paid next week. I know I'm going to get paid that week. And I know I'm going to get paid for pretty much for the whole month. The whole month I'm going to get paid at least $50. And that $50 is going to turn into another $50 next month. And then next month. And then next month. And then next month. And all I'm going to keep doing is when I get the dividend, I put the dividend right back into my account, or I can invest in more stocks. I can invest in even more stocks, get my shares up, and then you start getting paid even more. So it's compound investing. With $11,000. You want this is not particularly a growth portfolio by any means. It's more of a compound investing strategy that it really caters to my style and really caters. Right now, money for me is not an issue. This is money that I don't need. I put the money into the market because I want the money to compound itself into even more money. And if you look at all my stocks, excuse me, there's a lot of diversification. Here. You have a stock like Clorox that everyone uses bleach. Everyone uses bleach one way or another. So stock is trending up at incredible levels, and the stock can go back down, and then that's when I'll look at it, and I'll make a determination. I say, you know what? Do I want to buy some more Clorox at around $113 when it got all the way down to $113 around April 20th, and then I'll just write it right back up. So, you look at a stock like I have a pharmaceutical stock right here going, and Johnson and Johnson, pairing those stocks up. There's some technology here. Cisco systems. Everybody using routers. Everybody using computers. So I lost Apple. I'm not happy about losing Apple. Right now we're sitting on 14 stocks. I think I mentioned this before. I don't like to be any more past 15 stocks. I think past 15 stocks you really have to start doing a lot of work. Watching companies and you're doing your due diligence. But that's gonna do it, guys. You guys look at my portfolio. You can comment. You can say, hey, are you gonna throw Boeing back in there? Are you gonna? I'm more than likely gonna put Apple back in this portfolio again. The only reason why I sold it is because I wanted to use the $1,900 to get more stocks and get into more stocks like Walmart, Coca-Cola, Procter and Gamble, they're still there. Bank of America, cigarette group, cigarette groups, AT&T. I haven't talked anything about AT&T and the Time Warner deal. I thought that sell off when the Time Warner deal got announced was really. It was ridiculous. They just acquired a major company, and AT&T, they seem to be stagnant. But again, they'll pay you a 6% yield, and I don't know if they have a dividend, an ex-dividend date coming up. I have to check, but if you look at my portfolio every week, guys, every week I'll get paid a dividend. So that's gonna do it, guys, and I'll see you then.